Hello, thank you all for joining us for today's webinar, Forming an Entity, When Should Authors Create an LLC or S-Corp? This is one in an ongoing series from the Authors Guild Foundation called Money Matters, where we're discussing financial topics that are pertinent to authors. The Authors Guild Foundation is here to educate you all on the business of authorship, and indeed your writing is a business. So whether to incorporate is an important question that comes with a variety of legal and tax related considerations. So we're happy to have an attorney and an accountant joining us today. First, the host of Money Matters is Erin Lowry, the author of the three-part Broke Millennial series of books. Erin is a financial translator who's adept at discussing money issues for writers and people with various levels of background knowledge, so you're in good hands. Erin, thank you as always for moderating the discussion today. I'll say we've received a lot of questions in advance, but feel free to ask more in the Q&A box below, and we'll get to as many as we can in about an hour. Erin, I'll leave it to you.
Thanks, Johnny. Hi, everyone. Great to be here. I am very excited about hearing all the information we're going to have today, pertinent to me as well as all of you attending. So I'll just kick it off real quick with some intros. So Daniel Sheerin is an entertainment lawyer in the Los Angeles office of Cowan, DeBatts, Abrahams, and Shepard, LLP. His practice centers on entertainment and intellectual property law matters with a focus on television, film, book publishing, and digital media. Drawing on his background in both corporate law and creative ventures, he represents production companies, publishers, artists, and entrepreneurs. Thank you for being here today, Daniel. And Robert Pesce is a partner in the Tax and Business Services division of Markham LLC and a national partner in charge of its accounting services group. He has an outstanding reputation for developing strong relationships with clients in the entertainment industry, as well as professional services firms. His ability for successfully working with actors, authors, and agencies led to his instrumental role in the founding of the firm's media and entertainment group. Robert serves as treasurer of the Authors Guild Foundation. Robert, thank you so much for being here with us today as well. Daniel, I want to kick it off with you. The first question being, could you just, for the sake of clarity moving forward on today's discussion, break down the differences between sole proprietorship, LLC, and an S-Corp?
Thank you, Erin. Yes, I can. I should qualify at the outset here that I'm not a tax lawyer and can't provide tax advice, and really any sort of tax matters that you want accuracy or any sort of comprehensiveness on are Robert's forte here. But yeah, so entity-wise speaking, sole proprietorship is unincorporated. It's one owner who pays personal income tax on profits through your standard personal tax return. It's an easy form to the extent that it is a form. It's very popular. And while there are some state and local regulations and permits that are required to set up a sole proprietorship, it mainly is detached from any of the government involvements that the other entities have. And speaking as, for growing the business, it is a rather simple process for the most part to restructure a sole proprietorship as an LLC or as a corporation when the time comes. An LLC is the corporate person, which is separate from a natural person. You file and with your state, the formation documents, and then have an agreement. And what it means that it's separate from the natural person is that there is a limited liability of the corporation. And also there's the potential to tax the LLC in a different manner than a sole proprietorship would be taxed. But for a single member LLC, you can still elect sole proprietorship for the taxation determination. There's also partnership taxation, which would have the pass-through taxation, and corporate taxation, which is what you would do if you wanted to use an LLC as a loan-out corporation or a loan-out company, which we can get into later. Really, the only things that are required are the formation documents, that operating agreement I mentioned, which is either required or desired in every state, and usually annual filings or biannual filings for statements of information, New York State, there's an additional publishing requirement that you need to fulfill within, I believe it's 90 or 120 days of formation. And then you would apply for an EIN through the IRS and create a separate bank account, which separates the natural person, you as an individual, from the corporate person. And that's important because as you're maintaining the LLC, you need to keep up these corporate formalities to avoid what's called piercing the corporate veil, or appearing as an alter ego of yourself. You know, it's not, you can't just say, you know, the LLC wants this outfit and charge it to the company. Which that's sort of a sort of trite example of commingling, which is the easiest way that people get into trouble with corporate formalities, is that money that comes into the company can't be spent on personal expenses. There's a sort of tendency, if you're the one person who is, or can be a tendency for the one person who is the member or the owner of the company, to get a little wishy-washy with those things, but that can hurt you if you then later try to limit your liability and defend the separate corporate personhood of that LLC in a conflict. A corporation is what we think of when we think of a company, I think. It's formed on the state level through the Secretary of State, the same as an LLC. The S part of it is the S election is with the IRS, and that affords you the same pass-through taxation that you would get with the partnership, which would be that the income and the losses are not taxed on both the corporate and personal levels. It's double taxation, it's only once. And we see a lot of not S corporations, but C corporations for artists and creators in the motion picture and television industry. They actually do want double taxation for their loan out company. Leave off there.
I'm actually going to pull a question that just came into the Q&A because you just mentioned the EIN. So would a sole proprietorship be able to use an EIN as well, or is that exclusively to LLCs or an S corporation?
Can I answer that?
Yes.
Yeah. So an EIN is really only required for an unincorporated entity, even an LLC, if the entity has payroll, employees, or if it's treated as a partnership. Of course, it's also required for an S corporation. So it's not required in the other situations. It is certainly allowed. Anybody can get an EIN, an individual can get an EIN, an LLC can get an EIN, but it's only required if the author has employees, or if the LLC has other members and it's a partnership, or of course, if it's incorporated.
Thanks for that clarity, Robert. And following up on deciding between an LLC or doing an S corporation, Robert, is there a particular financial tipping point at which it makes the most sense to set up one or the other?
Well, from a tax perspective, I don't really see any benefit to forming an LLC. The tax savings is really achieved if you can make enough money to justify the costs of being an S corporation. For tax purposes, an LLC is treated as a disregarded entity. So a single member LLC files their taxes the same way they would if they were not even an LLC. And there's no difference in the tax results. It goes on a Schedule C, whether you're unincorporated, whether you're a sole proprietor or a single member LLC. So I generally don't see authors forming LLCs for tax purposes. They sometimes will consult with their attorney and decide that for legal reasons it makes sense to be an LLC, but not for financial savings and taxes.
Now, is there a certain amount of money that you see people need to make in order to justify becoming an S corporation?
Yes. All right, this is going to be a little bit of an overload of information. But what I tell people who ask that question of me on the phone when we talk is the costs and benefits make sense. The benefits far outweigh the costs. Really, once an author knows that they're going to make at least $400,000 a year for a number of years going forward, there's some really big tax savings that come into play once you start hitting that threshold. And the more you make, the greater the savings. I could talk about tax rates and dollars savings, but the short answer to the question is anything more than 400,000, it's really a good idea to think about becoming an S corporation. Anything less, it's just not really worth it.
Thank you for that. Now, Daniel, we've kind of flirted a little bit with the conversation, I feel like, of liability. So do either of these protect an author from personal liability and copyright infringement or libel claims? And if so, to what extent would that actually happen?
Well, we want to separate out here sort of the strictly acting as an author versus providing writing and creative services to others. And as an author, the short answer is not really. You're doing the writing. In any claim for copyright infringement or libel, every party that could possibly be named will likely be named. You'll be named as an individual. You've been doing the writing. It hasn't been found that having an LLC in front of you or a corporation in front of you is going to have any sort of deflection of the writing that you did. And in fact, a lot of number of contracts we see have an inducement so that the agreement could be between you and the loan out company or your corporation or LLC, and you sort of step into the shoes there at some point in the contractual relationship and say, I'm the one who's doing this, and sign an inducement rider. Publishing company doesn't want to have a book deal with an entity that can be, canceled or whatever. They really want you. But the fix there, and this is a very common question, and one that really is addressed more appropriately with media liability insurance, which is I know that the Authors Guild has resources to direct individuals to that sort of protection, and also it's an appropriate, common, and important request of you or your representative when engaging with a publishing company to ask if you can be added as an additional insured to a publisher's policy. Essentially, there's little to no cost for them, and it's something they're usually willing to give on. I've represented an author who had, a relatively controversial book in the height of a somewhat controversial journalistic career, and the publishing company did not blink an eye at adding her as an additional insured to their policy. There may be other circumstances where that might be part of a bigger negotiation, but by and large, it's something that they're willing to do. Now, if we're talking about ghostwriting, editing, content provisions, or work made for hire, writing services that authors can engage in, then I would say that yes, there is a benefit to having that done through an LLC or a corporation. Essentially, the services you're providing become a creature of contract, and the representations and warranties, indemnification, and limitation of liability in the services contract that you sign with whoever you're working for can limit that liability significantly. I always look for those three things. What representations are you making? What are they making? Are they indemnifying you if there's a claim, which the answer should be yes if you're doing a work made for hire project, and then limiting your liability to the amount of the contract is pretty market, and avoiding punitive damages and other sort of damages that go above and beyond what actually would have been experienced. And then, of course, writing teams can be popular as well. I don't know how often anyone on the call would engage in the classic writing team with an ampersand, but there is collaborative agreements are more and more popular. You can maximize and your talents. You find people who work well with what you do well, and then you'll be allocating risk among the parties. Between the two of you or three of you, or again, that simplifies things if you're the one company going out and providing services rather than the two individuals. So again, nothing will really prevent you from being named in a claim for these things, but when the time comes to defend yourself, having, in those certain circumstances, having the entity helps limiting liability.
Now, Robert, we've had some additional questions coming in about the idea of which state you should possibly set up an LLC or S-Corp. And a lot of that ties to the question of what are the associated costs of operating an LLC or an S corporation? And then I assume some states would perhaps be more advantageous than others.
Well, the cost of operations is probably similar in every state. It doesn't really matter. As Daniel pointed out, there are certain initial costs of forming the entity, specifically publication costs for LLCs. There are certain costs that are just high, and depending on what state you're in. But once you move past that and just talk about more ongoing operations, usually I will see an author form an LLC or an S corporation in the state that they are located in and technically doing business in. Doesn't really make a lot of sense to form the entity in a state that you're not in because of the tax-free nature of these entities. There's no tax savings really to form in a state that might have lower tax rates, because ultimately you're going to pay the taxes personally on the income that flows through to you in the state that you are a resident of. So forming it in another state would merely just help me out by giving me another tax return to do for the state that you live in and the state that you formed your entity in, which would probably not be very favorable.
Now, Daniel, why would an author want to have more than one LLC, or would they want to have more than one LLC, especially if we're looking at somebody who does different types of business? Maybe there's teaching over here, writing for clients over here, author over there.
I think of two reasons really, and one is the sort of outward-facing reason of branding and marketing. It might get confusing if you're doing sort of corporate corporate work in your 9-to-5, and then do writing marketing or investment materials or something very polished and corporate, and then teaching at setting up a writing workshop after hours on the weekend, and it just so there's the aspect of having some the branding and marketing in itself, having a consistent image, and having separate companies can help with that. There's also the aspect of having it goes along with sort of having anonymity or pen names if you're working under one. A lot of these things are of the public records. If you're working under one sort of type of brand, you may not want that image and reputation to flow into another aspect of your writing career. The second part of it is really the risk component. And it is helpful to silo liabilities and to protect assets. You typically don't want the degree of risk and the value of assets to be diverged or to diverge wildly or be disconnected. As a sort of analogous example, and one that's easy to envision, in the real estate industry, you typically have a special purpose entity for each separate property. So you may have one central company, but then for every actual piece of real property that exists, you would have a separate LLC or possibly a corporation, typically an LLC. It's a good way to think of it. And so, if someone falls through the floor of one of your properties, only that property is at risk. The other ones will be less likely to be at risk. So, you don't want to sort of have a valuable IP portfolio in the same entity as like a indoor gymnasium for children with an adventure course, or whatever else you can think of would be the highest risk possible. It comes down to, as most of this discussion does, a balance of costs and potential risks, but it's good to keep the connected potential liabilities and assets together, and you want to avoid being potential claimants being able to reach distant assets simply because they're in the same entity. It's avoidable, and because it's avoidable, it's prudent to do so if it's cost effective.
Now, Robert, we got quite a few questions about different types of retirement plans, whether that's a simple IRA, a SEP IRA, as well as health insurance. And do these LLCs or S-Corps impact your benefits like what you could have access to for health insurance or use as retirement accounts?
And I would say that the benefits that you're talking about are basically available the same way, regardless of whether you have an entity or not. Most of the authors that I work with do participate and fund their SEPs based on the percentage of the profits that they have in their sole proprietorship or single member LLC. If you're an S corporation, the amount that you can put into your retirement plan is based on how much salary you take from the S corporation. And generally, anybody who has an S corporation becomes an employee of their own corporation, takes a certain salary to do a couple of things: to minimize Social Security and Medicare, and to be able to use that salary as a basis for funding their retirement plan. I was talking, when we were talking about the tax savings, about whether or not the threshold is to become an S corporation. Just a little point of fact: we all pay 15%, roughly 15% Social Security and Medicare tax on the first $140,000 of income that we earn. So if you're an author who's making $500,000 and you're not incorporated, you're going to pay 15% of the first 140, plus you're going to pay 3% Medicare on the excess over the 140. So that can cost you a lot of money. That's 3% of the extra $360,000 of income. So what I see when someone's getting to that level, I'll recommend that they incorporate, become an S corporation, and they'll pay themselves a salary of, let's say, $200,000. They'll pay Social Security on the $200,000, the first 140, and they'll pay Medicare on the excess, which is another 3% on the 60,000. But they'll avoid the Medicare tax on the other $300,000 of profit, and that salary that they took will be able to be used to figure out a calculation for funding their SEP. And of course, health insurance is available in any situation.
Now, we've brought up the financial tipping point for being an S corporation, and there might be a point where it makes sense to incorporate, but then perhaps years down the road, you're no longer earning that same type of money. So if there is a big drop off, is there a point where it makes sense to convert, and can you even convert an S corporation to an LLC or dissolve it entirely?
I'll take that first, and maybe Daniel has some more to add to it. When I see an author who starts to become less popular and has a reduction in income, who already is an S corporation, we'll talk about possibly dissolving that entity, because it's no longer necessary to spend the money on getting a tax return done for that entity that doesn't really have any benefits. It's not something you have to do, but it's something worth considering. But to my knowledge, you really can't switch from an S Corp to an LLC. You can do the other way. You can be an LLC and elect very easily to be an S corporation, but you can't do the other way. So once someone's career starts to change in the opposite direction that they want it to go, at that point, you start considering dissolving the S corporation.
Thank you, Robert. And is it practical ever, when you have an LLC, to have it be taxed like an S corporation? And if so, what exactly does that entail, Robert?
So if somebody formed an LLC without talking to me first, I would talk to them about that and ask them why. And assuming it wasn't for some legal reasons, and it was just they thought they should do that for tax reasons, I'd let them know that they really didn't need to do that. But if they're making over $400,000 or $500,000 a year, there would be a great tax savings for having the LLC fill out a one-page form that elects to be treated as a corporation and simultaneously then elects to be treated as an S corporation.
Now, Daniel, there's been a lot of conversation, obviously, around the PRO Act and other forms of gig economy legislation that's being debated at various levels of government. So would having an LLC or an S corporation or, and I think it'd be great to bring up, loan out companies be helpful when considering this legislation?
Thanks. So I have to qualify that, saying I'm not an employment lawyer, but I think that the answer here is we don't know yet. I'm based in California, and California has gone through the cycle of applying statute, case law with Dynamex, and then recently codified those principles under AB 5, where essentially no one is considered an independent contractor except if in certain circumstances where you're not providing services that the company would already, or they're not in line with the company's principal line of business. So I mean, if you provide like information technology services to a law firm, then you can be an independent contractor, but otherwise everyone's an employee. There's been, this is all subject to massive lobbying campaigns, the final wording of legislation, statutes, amendments to the statutes that come rather quickly based on the reaction to what passes, how it's enforced, how it's tested in court. But I will say that with the sort of precedent in California, there have been amendments to create exemptions and exceptions for entertainment industry professionals, including writers. And then there are those industry practices and customs that just do not pay attention to what the law has changed to and are relying that these laws will not be enforced on them. So it'll be interesting to see how it plays out in practice, and difficult to predict how that will all shake out.
And could you actually do me a favor, Daniel, and elaborate on what a loan out company is for folks who might not be aware?
Yes, so a loan out company it has both tax and employment considerations there. And you find it, I think, most often in the motion picture and television industries, and a writer or writing producer or producer, other sort of above the line professionals create a corporation, or often or sometimes an LLC, taxed as a corporation, although that is more rare, that engages with the studio or production company. So the contract is between the studio or production company and that entity. And that entity technically employs the talent. So the talent is an employee, not of the studio or the production company, but of the loan out company that talent has himself or herself created. There's a consideration, I believe, and Robert, you can correct me if I'm wrong here, with double taxation, where there's often benefits with various expenses that are run through the corporate level that then trickle down ultimately for significant tax savings for the talent. And it also allows both the talent to act as an independent contractor or service provider in relation to the studio, and then go on and do separate projects, and allows the studio or production company to avoid whatever comes with having the talent as a direct employee of the studio or production company. These are extremely common above a certain level. More often than not, if it's a production company or that you see getting projects made, talent is engaged through a loan out company.
Yeah, Daniel, what I see sometimes is an author who's a book author, but then gets some kind of a contract with the studio. They're not at the point where they need to form a loan out company. So the studio will treat them as an employee, and I'll get this surprise W-2 from them.
Yep.
What is this? And they'll tell me what happened, and it's fine. It's just a little bit of a curveball.
Yeah, that makes sense that happens, especially if it's a first introduction. If typically a writer would be engaged as some sort of producer on a project, and we see that much more often than not.
Now, Robert, we've alluded to it a few times, well, Daniel's point with the legality of setting up any of these, and with you as well, about the importance of separating personal and business finances, really regardless of whether you set these up, but certainly if you set them up. So do you have any simple best practices for folks in terms of ensuring that you are keeping business and personal finances separate and not piercing the corporate veil, as Daniel mentioned earlier?
Well, what I tell authors who are starting their own business as an author and want to make their lives simpler, even if they're not concerned about piercing the corporate veil, you don't want to be stuck at the end of the year trying to figure out in your personal checkbook what you spent money on that was for business versus what was for personal purposes. And the same thing with your credit cards. You don't want to deal with that. It's just not productive and you'll miss stuff. So what I tell them is to open a bank account that's used exclusively for business. All the money that you receive from your publisher or your agent gets deposited into that bank account. And that bank account is the account that's used to pay all the eligible appropriate business expenses. The checkbook tells the story of the business. Same thing with the credit cards. You don't need to get a credit card in the name of your entity or the name of your business, but well, maybe you should for legal purposes, but just for the purposes of making things organized, you have 2 credit cards in your pocket. You got a gold one and a green one, pick a color. Okay, gold. Gold is the business card. Whenever you use that card, it's for business. This way, at the end of the year, the annual statement tells you what you spent and all of it's business. There's no cherry picking. There's no wasting time going through business versus personal.
Yeah, I agree with that, Robert. And I think that's very important. I've had a client who, on his business card, he put like a piece of duct tape around the non-swipe parts that he knew when he went into his wallet at a restaurant late at night that he wasn't sort of figuring out which gold from the green. He knew that this got the tape on it. This is the business, just to avoid a headache. I think that both the practicality of you'll end up saving money if you're able to efficiently deduct expenses, and you're saving yourself a big headache. And then exactly on the corporate level, what I hear from my litigator colleagues is that if an LLC or a corporation is in any sort of dispute, if you have highly organized records, if you have everything done correctly, if it's all very easy for anyone outside of you to understand, and you can sort of just turn that over, you can present that, it really bolsters your case. If you're sort of figuring out, backtracking and sort of trying to recreate that you've been this effectively run and entity that's maintained all of its corporate formalities, it's difficult. You're backpedaling. It's not as strong of a case to present that you have no personal liability.
Yeah, you're gonna have an auditor that's gonna have a bad attitude about you, start to make judgments about you, and you don't want that. I think every sitcom in the history of television has the episode where they get audited by the IRS, and it's always the proverbial shoebox. It's a nightmare.
Yeah.
Yeah, scary words, audit. Now, Daniel, if you want to hold a copyright ownership, or if you do hold a copyright ownership, is it best to do that as an individual, an LLC, loan out as a corporation? Do you have a recommendation on the best way to go about doing that?
Well, it depends what you want to do with it, really. If you're engaged in a lot of licensing, then an LLC or a corporation is the way to go. If you have a vast portfolio, and to organize that between how you're looking to exploit it and how you want to divvy everything up for estate planning purposes, it's likely better to have those in various entities. For if you're not around to explain it to someone who's working for you or someone who's trying to figure things out after your death. The copyright registration exists as a sort of public exhibition of who's creating what. If you write under a pen name or looking for any sort of anonymity, then you'd want to hold that not in your legal name, but in an LLC. I believe you can register a copyright under a pen name, but the additional sort of anonymity of an LLC or a corporation could be beneficial there as well. And you can always, if you hold copyright in your legal name, you can assign it at a later date to an entity. If, as your portfolio grows, if you're looking to sell your rights, it may be that a potential buyer is more interested in buying all of the assets of a given entity than they are sort of parsing through what they're buying from you. So that might be a possibility down the line too.
We've had quite a few pre-submitted questions, as well as a couple of questions in the Q&A right now about protection, about liability. So the first one being, if an author is sued for copyright infringement or libel and they're married, is the spouse's assets potentially at risk because the author is being sued?
I'll have to punt on that a little bit, because I don't know state by state necessarily how that applies. I know California is a community property state, so those considerations come into play. I don't know the answer to that. I believe that to the extent the author himself or herself owns that percentage of community property or his or her separate property, it could be exposed. If the spouse's separate property, unlikely that that's exposed. But this is sort of a highly specialized question about family law, and would be a state by state determination based on how that state classifies marital property.
So to elaborate then on that, if you're somebody that's trying to figure out how to best legally protect your family's assets against any unforeseen lawsuits, what would be your recommendation about how to, whether it's like vet lawyers, looking into state law, how would you recommend going about trying to create that defense system for yourself?
Right. Well, the sort of universe of asset protection that's available is really broad, and at the highest levels for the sort of best practices, which is what you're asking after, it can be very expensive. You really have to figure out what the risks are and what the costs are. Now, if you're writing a tell-all memoir that has a few people who are implicated and may reach out to you and sue you, and you own, you have a number of Swiss bank accounts, a number of offshore accounts, there's the family castle, and there's a number of vacation homes, like you're probably going to be okay because you have an asset protection structure that's set up to allow you to do essentially anything, and your assets will be unreachable. And that structure costs a lot of money. If you have an apartment that you own and you're writing that same book, it's a higher level of risk. I'm not a trust and estates attorney, but I know that the creature of the irrevocable trust can protect liability, whereas the irrevocable trust doesn't. And then in addition to the media liability insurance that you can have an umbrella policy on top of that would stretch to, I have a client who got an umbrella policy for, I think, $20 million. That's going to cover most of what you're worried about out there. And I know, as with a lot of insurance policies, the first $1 million is the most expensive. And then if you want to ratchet up to higher levels than that, it gets less expensive to get the additional insurance. These are all very, cost intensive answers. But as I said, it's really an assessment of the risks, an assessment of the costs involved. And you can tie everything up 100% if you want to pay for it. But most people aren't in that position. And so you sort of have to gauge it on a case-by-case basis.
Now, Robert, is an author required to get a sales tax number to collect and remit sales tax on books he or she sells? Which I'm thinking, especially for our self-published authors that are listening, and could be really important, because obviously if you're traditionally published, you yourself are probably not doing a lot of the sales. But if you are self-published, what does that look like in terms of sales tax across various states?
Well, I'll answer that question based on the soon to be changing rules. But historically, you're supposed to be registering in the state that you do business in if you're involved in selling tangible property. So if you're self-published and you're selling books to readers within your state, whether you're doing it at a book fair or you're doing it online, you're supposed to, depending on the thresholds, and I don't know the thresholds for every state, but depending on the thresholds, you're supposed to register with the state. You're supposed to then collect sales tax from the sales and then remit that sales tax on a quarterly or monthly basis to the state that it applies in. So that doesn't mean you have to do it to all 50 states unless you have physical presence in those states. It's just the state that you're physically present in. That's the general answer. Now I get calls about this sometimes from an author who says they went on a book, a book tour, and they sold some books. And I'll ask them how much they sold, and they'll tell me, $150. And I'll say, don't worry about it. I'm not even going to look it up. It's just not what, the tax rate might be 8% on $150. The state's not going to worry about that. It's when you're really in the business of selling books at a high volume.
Thanks, Robert. Well, I'm at this point going to be opening it up for Q&A, and I know people have been dropping questions in along the way. I've pulled some already that we can get started with, but also for everybody tuning in, if you have additional questions, feel free to drop them in now. But a couple of times media liability insurance has been brought up. And Daniel, I know you just were also talking about umbrella liability policies, that there are different options, but media liability insurance can be very expensive. Are there slightly more cost-effective options for getting insurance without spending more than you expect to make on possibly an advance or even royalties on your book?
Well, I would say if you're getting an advance, then you should inquire with the publishing company, which would have media liability insurance in place, about becoming an additional insured, which would cost you nothing. I don't know the sort of broader market of expensive or media liability insurance. I know that brokers tend to need to have a preliminary discussion with the covered party and talk about what you're doing, and I've been on those meetings with clients, and depending on what they're involved in, they sort of have a quote that they'll come back with, as if someone were insuring your house. I think it's a little bit different. I mean, there needs to be, if you're looking to get media liability insurance on a book, I'd assume that the insurer would need to review the manuscript of that book to figure out what it means that they're insuring it. Just like they have to go to your house and see what your house looks like before they can give you a policy there. So, I mean, I guess it depends. I'd assume, literary fiction would be less of a burden or a potential risk for an insurance company than a political book or a book that's an unauthorized biography. But that's for them to decide.
And Robert, when we're talking about working on separating personal and business, if you want to set up an LLC so that you can get that business bank account, can you then write off the cost of setting up the LLC when you do your taxes? Is that cost of doing business that's able to be written off?
Yeah. So your legal fees, your professional fees, anything associated with getting your taxes done or getting your entity formed would be a deductible business expense. Yes.
Now, in a follow-up to that, I know we've talked about how with an S corporation, there's a particular way you have to set up receiving a salary. What about with an LLC? Is there a certain kind of way that you have to demonstrate paying yourself a salary?
Well, as a member of an LLC, you would not be an employee. There's no ability to be an employee of your own LLC, so you wouldn't do that. Which is why I don't generally recommend people form LLCs if they're trying to save money on taxes, because if the LLC makes $400,000, you can't save Social Security by paying yourself a salary, because by nature of an LLC, everything that the LLC makes is subject to the Social Security and Medicare tax.
Understood. Now, Daniel, there have been a few questions about, in simplest terms, what is the advantage legally in terms of liability, just overall, of having an LLC?
versus
versus just being an author in the world who doesn't have any of these set up. You just have your book dealer, or you're just doing your writing. And possibly too, for those of us who write in other formats, whether it's as a journalist or have other types of writing business, if you choose to not go down either of these paths, is that all right? Or for legal purposes, should we really be committing to probably LLC unless you're making that nearly $500,000 that Robert pointed out earlier?
Right. Well, I think that in a lot of these situations, I'll second Robert's opinion that having an LLC isn't going to do that much for you. In the sort of author context. Again, if you're involved in writing or if you're a creative services provider, then there are benefits, because the liability protection can be in place. If you're a service provider, you're doing editing, creative services, ghostwriting, all these things for another party, you can contract, the contract between you and the other party will govern, and the LLC will provide a layer of liability protection in that situation. That's not really, it doesn't really comport as well with the strictly author practice, sitting down at the desk and writing the book. That's not exactly what how an LLC works.
Now, LLC versus an S-Corp. Obviously, we've talked about the financial side of it, but legally, does it, in terms of protections, ever make more sense to have an LLC compared to an S-Corp? Does it provide more protection in terms of liability or anything else? Or are they essentially comparable or comparable in the protections? It's just more of a financial tipping point in the taxation side.
The limitation of liability is comparable for both a corporation and an LLC.
Now, Robert, somebody has been asking too about beyond when you form an LLC, beyond new bank account for the entity, are there other specific actions that you need to take to separate yourself as an individual, especially when we think about kind of the tax liability side of all of this, that scary word audit that got brought up earlier? What else should we be doing to make sure that everything looks pristine on paper?
Well, I would think that you want to have whatever bills, whatever money you're spending as an author, whether you're an LLC or not, you want it to be defendable as a legitimate, necessary business expense. It doesn't really matter, whose name it's in to me. So, for example, if you are leasing an automobile and you are necessarily need it to be able to run around and do your research and travel to be a relevant, successful author, I don't really care if that lease is in your name or your LLC's name, but you want the LLC to pay the bill if it's going to be a deductible expense for the LLC. Now, Daniel might have some concerns about the bill being in one name versus the other, but it doesn't really bother me.
You, Daniel, do you have any concerns, or are we good to go?
Yeah, I don't know. I don't have a concern there.
No, I have been getting asked by a few people about the difference, do journalists count when we're talking about creative service providers? And it's been noted a few times, when you're a journalist, especially a freelance journalist, and you're looking at bylines, it wouldn't say like Lowry Media LLC, it would say my name, Erin Lowry. So is the thought that if I have an LLC, I have a contract separately as an LLC with the publication outlet, but my byline is still my name? So if I got sued for liable reasons on that article, it still would flow through the LLC as protection? Or how should we consider, as journalists and authors, protection in that front?
Right, the journalism is not exactly the same pot as ghostwriting, editing, creative consultant type person. I think that there would be, I think it's more akin to the author there, and as far as the libel and defamation concerns. So having an LLC on the contract with for your journalism projects is I think that would be limited protection there, if any. I mean, you're researching and writing the article. It's done. The other, you know, the obviously the outlet would be a named party if there were any claim against you based on the article. They vetted it, edited it, and published it. So, but between you and the LLC that you use no, I don't think that would be tremendously effective. But again, case by case basis, you know, it's tough to make a blanket generalization on that sort of thing.
Robert, we have another deduction related question that I find interesting. I'm sure it's happened to a lot of folks at some point, but if you're working on a project and perhaps not going to get paid for it in this calendar year, can you still deduct your home office expenses from taxes if you're a sole proprietor?
Well, there's two answers to that question. Assuming you're already a successful author and you've got advances and royalties coming in every year from work that you've already had published, you don't have to match the expenses on the next book in the year that you receive the revenue from that publishing contract. So the answer is you can take the home office deduction as long as you have a profit in your business. So as long as your income is greater than your expenses, the home office deduction is allowed. If your expenses are greater than your income, then the home office deduction is not allowed and gets either eliminated or carried forward.
And in the point two of losses, somebody did ask, how many years are you allowed to have losses on your return for your writing business before the IRS comes a knocking that it's a hobby and not defined as a business?
I don't think there's a real set number of years, but once a client of mine has losses that are 3 years in a row, I start warning them that they're going to be susceptible to an audit, and it's going to be difficult to convince the auditor that you're really an author in a for-profit business, and really what you are is just somebody taking advantage of taking the deduction for a hobby. That's my rule of thumb. There's no real answer to that question.
Now, Daniel, obviously there's been a lot of concern in all of the questions submitted about this idea of liability. And as you mentioned, you could potentially get added to your publisher's policy. But if there is a limit in some respects on the coverage to that, do you suggest having a stopgap secondary coverage? Like in general, is that just a good idea for liability?
Again, it comes down to an assessment of cost versus risk. If you're doing a project that has a considerable risk of people coming forward and making claims against you, then of course it's good to have a backstop there. If the cost of getting this insurance policy is nowhere near reasonable in relation to what you're getting paid for it, or in the potential risk of people coming after you, then I guess you have to figure out what you want to pay for and what your risks are. I wish there were more concrete answers to many of these questions as far as what you should and shouldn't do, but really the variables here of what resources are available and the level of risk you're engaging in are changed necessarily with the individual circumstances of both the author and the project that the author is undertaking. So it's very good to be aware and conscientious of it going in and know what your options are and what routes to investigate. But as far as a determination of how you as the author need to analyze and come to a conclusion on those, it's really based on the unique circumstances.
And I also just want to say to everyone tuning in, I know there have been some questions regarding estates and protecting your estate. And we do want to point out that we will have an estate planning specific webinar in a couple of months, which will dig into all of that with an estate planning attorney in addition. So we're not going to have to keep having Daniel perhaps talk to areas of law that are not as specifically his area of expertise. So I did want to let everyone know that. Now, Robert, I have a question about Americans living abroad and how that impacts our taxes. I know we are one of the countries that do tax our expatriates in some situations. So as an American living overseas and an author, the question is, which state can I form a sole proprietorship and which one is best? Or I would assume that could also be LLC or S corporation.
Yeah, I work with a few authors that live abroad. And from a federal tax perspective, there's an exclusion of income. I forget the exact number, but I think the first $120,000 of income that you earned abroad as a U.S. taxpayer are exempt from tax as long as you spend a certain number of days. I think you have to be out of the country for 360 days. There's a physical presence test. There's a whole bunch of different tests to comply with. But if you meet those thresholds, you can exclude a significant amount of your income from U.S. tax. You still have to file a return, but you would claim the exclusion under the foreign income exclusion.
And also, is a sole proprietorship the same as a DBA, a doing business as?
Yes, neither one of them are an entity. It's you, either one, they're the same.
And Daniel, have you heard of any situation in which the translator of a book would assume any level of legal liability as the author of that book would take on?
I don't know. No, I've not encountered that. That would be, there should be something about that in the contract that the translator signs with the publishing company or with the author. I suppose an accurate, I can't speak to whether it's an accurate translation or there's some sort of creative component to translation. Perhaps to the extent that the translator has changed the underlying meaning of the text and that altered meaning is the part that creates the risk, then potentially, but I guess it would come down to the contract between the translator and who's ever engaged in the translator for those services. Translation services to me feel like more of the ghost writing, editing, creative consulting type services than the authorial role.
All right, and final follow-up on that is the editor of a book. Now, I'm going to make an assumption if you're at a publishing house, there's a certain level of protection that you would have with the publishing house's media liability policies. But I guess also if you are working as an editor, is there a recommendation about which type of business would be best to set up?
I think, if you're doing freelance, if there's something that comes up, as I said before, it's possible that any claimant is going to name anyone that they can who's involved in the lawsuit, just cast the widest net possible. And so as a freelance editor, you would want to have something in the agreement with the writer where you're indemnified for any third-party claims that result as from the text that you're working on. So that it's really, again, it's a creature of contract between the service provider and the client of the service provider, who would be either the author or the publisher at that point. But as far as inherently, I think that the distinction between the author and the creative people providing services to the author and for the book project, there's a somewhat of a difference there. And I think that the editor, to me, whether it be an LLC or an S-Corp, they're analogous. If the corporate formalities are kept up, and I should note that that's maybe answered too quickly before, there are more formalities for a corporation than an LLC. So it's necessarily more maintenance but if you keep up all that maintenance, the corporation is just there's more of a substance to the separate corporate personhood of the corporation. But an LLC, it's easier to check all the boxes day to day of maintaining that separate entity. So either one of those works depending on the other circumstances. And I think I would do that if I were a freelance editor. And I'd get that indemnification from the author or the publisher that whatever I'm editing doesn't come back and edit me.
Well, thank you both so much. This has been a wonderfully informative hour, and we appreciate very much you taking so much of your time to be here with us today.
Thank you.